Our next talking point in this series is going to be risk management. Risk management should have been the first point that I talked about, but a lot of people have been asking me, so I figured I would just kind of dive in head first. So, what we're going to do today is we're going to take a step back. Risk management is the key. Now, I know you might feel like even though you are learning, or you might feel like because you're on a hot streak, maybe you have beginner's luck, whatever the case, right? A lot of times we start to feel invincible, right? So let's say you took, for an example, let's say you took $100 and now you flipped it and now you made $200. The next thought will be, okay, I could take this $200 and flip it to $400. And while, yes, that's very likely, nobody that does options trading is batting 1,000, aka, making all of their wins. Losses do happen. It's a part of trading. Losses in general is a part of life. Now, while your account is small, yes, you can afford to risk a little bit more, or maybe your whole account if you have a very small account. But unless you really hit the play out of the park, that, for an example, let's say you have $50, right? Most options they're gonna be like very far out of the money unless you do a 0 day play and towards the end of the day, which means you will have to scalp it, you know, um, jump into play real quick, jump out of the play real quick. The 0 days, if you hold those contracts for too long and there's not a massive major news catalyst or something like that, that play is going to wind up losing value and fast. Like I said in the previous videos, towards the end of the day, theta decay starts really, really eating up the price of those contracts. So let's say that contract that you got for that $50. If you were to look at that same option, if you were to look at it earlier in the day, you could have paid it double, at least double to triple whatever it's going for towards the end of the day. Just keep that in mind. So now, what does that have to do with risk management? In order to build your account, you have to. It's like a long game. And while, yeah, you could go ahead and you could get a few wins in. You're not gonna hit home runs all of the time. You might wanna stay in a play that you see is not really going your way, and you might hold on to that play. Are you cool with losing this money? The answer should be yes. Because why do I say that? I say that because you only should trade options with money you can afford to lose. And I'm not coming at anybody. I'd like to give real life examples. On my other page, I shared a story about how I put my rent money into an options play and I got smoked. This was when I was in North Dakota. So yeah, I'm human. I can't tell you not to do something and be like, oh well, have you ever did it? No, but I know you shouldn't do it. You get what I'm saying? That's the type of angle that I like to come at with my content. So yeah, like even to this day, as you guys know, I'm a scalper. So I'll go on my lunch break. I'll look for something. I'll jump into play. Now I was looking at my Weeble that I've been trading on, and the past 2 Wednesdays were red for me. The rest of the days are all green. So like I've had some big wins, I've had small wins. My two losses though, my two losses were big losses. And while the losses are expected to happen, I didn't just cut the play. I do have an excuse where one of those losses, it was still gonna be a loss, but I thought I had set my stop loss and I didn't. And so when I saw that my stop loss wasn't set, I averaged down on the play. Averaging down means I put more money into that same play, hoping that it would at least come back to break even or gain me slight profit. That's bad risk management. But again, I'm open and I'm transparent. So that's just what it is. So how do we limit our risk management, right? Let's say you take $35, right? And you start making some plays. Of course, you're going to get small wins at first. So you turn $35 to 42. That's a 20% gain. 20% of 35 is 7. So yeah, sorry, I can't help it. So you turn 35 to 42. Now the $42, let's say you turn that to 50, right? You take the $50, make it $75. You just more than doubled your $35. So what should you do right now? Any good options trader is going to teach you the importance of taking profit. Taking profit means paying yourself. You had $35, you got 75 now. At least take your $35 back off the table. So now what does that do for your risk management? That takes all the risk off the board because now you're playing with the quote unquote house money. Yeah, my bad. So now your $35 is off the table. You playing with the house money. Yeah, the key is to keep growing it. Because at some point they're gonna win. So just remember, always pay yourself. Keep everything in perspective. Keep a realistic view of everything. And I'll see you guys in the next one. Thanks for tuning in.